Hi everyone, I am your host Shweta and welcome back to another exciting episode of KiBloc Show. First and foremost, I would like to thank you everyone for supporting the KiBloc Show channel and making this community bigger by subscribing to the channel. Within a couple of days of first introduction episode of the KiBloc Show, we have a blockchain family of 165 members. Kudos to you all. In today's episode, we go over the latest news related to the blockchain, technology, and cryptocurrencies. Let's quickly go over the latest breaking news related to the blockchain industry, Bitcoin, Polkadot, Ethereum, USDC, stablecoin, and Cardano projects, which made headlines this week. So without any further delay, let's just jump start into it. Let's have a look at the recent article published at Cointelegraph, which talks about the PwC report. PwC report evaluates that blockchain technology will make up 1.4% of the global economy, which is equivalent to $1.76 trillion in next 10 years. This leads to our question regarding the possible catalyst for 1.4% global economic growth because of the blockchain technology implementation. This all will happen due to a wide range of possible use cases. Blockchain technology will potentially add $1.76 trillion to the global gross domestic product. Interestingly, more than 50% of the CEOs believe that faltering trust in the business process was affecting their organization. PwC report further states that blockchain will help organizations verify contracts, identity documents, certificates, records, and agreements, which will improve and provide a more efficient system to industries. No doubt that there is huge potential for blockchain across various industries, ranging from healthcare, government and public services, manufacturing, finance, retail, and logistics. PwC economists expect that a majority of businesses in these industries will use blockchain technology in one form or the other by 2025. Moreover, the PwC report says that provenance payments and financial instruments, identity, contracts and dispute resolution, and customer engagement will be the top 5 use cases of blockchain in the next 10 years. 61% of CEOs said that they were facing the digital transformation of core business operations and processes among their top 3 priorities as they rebuild from COVID-19 by using blockchain as part of organizations' future strategy. Now, look at the potential dollar figures of the blockchain technology market growth. Blockchain's use of tracking and tracing of products and services or provenance, which emerged as a new priority for many companies' supply chain during the COVID-19 pandemic, has the largest economic potential and expected to add $962 billion to the global GDP. Payments and financial instruments may potentially add $433 billion, while the identity and the contracts, dispute resolution, customer engagement are expected to have an impact of $224 billion, $73 billion, and $54 billion respectively over a decade. Wow, these figures are really impressive. Furthermore, the report says that by the end of 2021, blockchain will add $66 billion to the global economy. The report estimates that blockchain's impact will increase 6.5 times by 2025, taking the valuation to $422 billion by 2030. China and United States are expected to add $440 billion and $407 billion to their GDP through the expansion of the use of the blockchain, while Germany, India, Japan, and United Kingdom will be the other top hubs of blockchain innovation. What I can say based on the PwC report is that future of the blockchain industry look very bullish and promising. Another exciting news coming from Italy related to Italian banks and blockchain. As you can see that 100 Italian banks are now officially on the blockchain, the Italian Bank Association (ABI) announced Tuesday that about 100 Italian banks are officially operating on the country's banking blockchain network Spunta, built on R3's Cardaon after the latest addition of 42 banks. I begin to wonder what makes Italian bank to integrate blockchain technology into their banking operation. Well, the answer is straightforward, that the blockchain speeds up the complicated process of interbank reconciliation where banks have to agree on how much money is owed by one bank to another. In the banking process, reconciliation took normally weeks to complete, but because the blockchain keeps a verified interbank transfer log, processing can be done within a day. Italian banks joined the Spunta blockchain network in waves. There have been 32 banks since March 2020, joined by 23 more in May and 42 more in October, according to the announcement. This news proves the point. The banking section is among the several sectors where blockchain technology can bring revolution and help the banking sector to evolve and become more efficient. Our next blockchain news is coming from an African country, Nigeria, where the federal government is welcoming blockchain technology with open arms. According to this CoinDesk article, the federal government in Nigeria is planning to facilitate national crypto adoption with the vision of creating a digital Nigeria. The project document National Blockchain Adoption Strategy states that facilitating blockchain adoption is part of a larger effort by Nigeria President Muhammadu Buhari to diversify the Nigerian economy. Last month, regulators showed interest in governing the space with Nigeria's SEC, saying it will treat all cryptocurrencies and token offerings as securities, which is a 180-degree turn from 2017 statement of the Central Bank of Nigeria, which at that time declared that digital currencies are not legal tender in Nigeria, while the country's Securities and Exchange Commissions warn against the risk of investing in digital assets. According to the new framework, the idea is to use blockchain technology as a platform for the transition into a digital economy. These all are welcoming moves by adopting and implementing blockchain technology for the betterment of the society and people. Another exciting blockchain-related news is coming from the US related to the first presidential vote cast using blockchain technology with the 2020 presidential election less than a few weeks away. Revolutionary blockchain voting technology is being piloted in small pockets of the country, and Tuesday, 12 October 2020, marked the first time a vote has ever been cast for a US president in the general election using such an app on a personal mobile phone by using blockchain technology. According to Utah County Clerk Amelia Pars Gardner, who has been using the system for 5 elections, says it is one of the most cost-effective initiatives that her office has undertaken since she was elected 20 months ago. Clearly a positive sign that in the future we will hear more and more news of using blockchain technology for secure, cost-effective election voting across the world. Now, let's look at this interesting Cointelegraph article about Bitcoin, which says that Bitcoin can possibly touch a $20,000 mark in the next 3 months. Wow, that's a very bullish news for the whole cryptocurrency market. Let's look more into this news article. According to analyst Mr. Mohit Saraut, Bitcoin could rise to a new all-time high in 3 months when it breaks out of the existing range. He further added that the price of Bitcoin has been consolidating within a tight range for several months. If Bitcoin successfully break out of that range, then a record high would be imminent. Since July 2020, Bitcoin has been ranging between 10,200 and 11,800, a 15% range. When Bitcoin stays stable for a long time in a tight price range, a major price movement typically occurs. Mr. Mohit further added that claims before the storm. If Bitcoin was to break out today, it would most probably reach its previous all-time high of 20,000 within 3 months. Very bullish article about Bitcoin. Let's hope for the best. There is a piece of really good news coming for Polkadot fans. On 16th October, one of the leading cryptocurrency trading platform, Bitfinex, announced that it has made staking rewards available for Polkadot, the native token of Polkadot blockchain, which would allow DOT token holders on the Bitfinex platform to earn rewards of up to 14% per year. According to the information shared with AMB Crypto, the staked DOT tokens will be held on the Bitfinex platform and will be utilizing the exchange in-house custody solution. So far, the Bitfinex platform has also made staking available for Cardano, EOS, Cosmos, V Systems, and Tezos. To me, it seems like an early Christmas news for Polkadot token holders. Next, we have interesting news coming from Ethereum, the second largest cryptocurrency platform, that thousands of Ethereum 2.0 validators expected to stash more than 500,000 Ether in a prohibited multi-year lockup. According to this recent article by CoinDesk, during the Ethereum Economy Conference, which happened this past Wednesday, it was discussed that Phase 0 of Ethereum's migration to Proof-of-Stake blockchain involves having 16,384 validators, each commit to pacing 32 Ethers in a soon-to-be-announced deposit contract. Those tokens will then be staked to secure and govern a new parallel Ethereum blockchain known as Beacon, which will function as a live environment for testing the proof-of-stake system to which all the Ethereum will eventually migrate. The element here is that logged Ether cannot be sent back to the original Ethereum blockchain and cannot be accessed until the two systems are merged and the duplicate Ethers on the legacy chain destroyed. Clearly, a lot of trust is required from the Ethereum community for this migration. This transition is definitely going to be much more difficult because the current timeline of lockups is 18 months. But given how long it has taken for the first phase of Ethereum 2.0 to start, it could well take much longer than that. The complexity of this migration is not just technically but also economically, with its biggest challenge being how to manage incentives so everyone else move their Ether out of the legacy proof of work chain into the new one. There is almost 198 million worth of Ether based on the current price are at stake for the validators involved in Beacon, and this is less than 0.5% of Ethereum's total 42 billion market capitalization. These particular funds matter. These high energy funds are unquestionably held by true Ethereum believers who are actively interested in how it evolves, not by casual Ether investors. The logged Ether presents a contract that promises a set of contingent future cash flows. By transferring a token created by a fully collateralized smart contract to a creditor, validators can receive funds in unlocked original Ether and in return promise that when the blockchain merger happens and the lockups end, the creditor will automatically receive the original 32 Ether plus the accumulated staking rewards. Based on the stacking reward projections, these bonds would earn 20% yield on an annualized basis and then fall according to a sliding scale. As the total amount of stake grows, 20% of yield looks promising. However, there is a lot of uncertainty and variables involved here around the precise date at which the funds will be unlocked or the value of the Ether in dollar terms at that time. Both are somewhat dependent on how well and how efficiently Ethereum developers progress towards the goal of a fully integrated Ethereum 2.0 transition. I just want to wish all the best to the Ethereum community, as it may be a bumpy ride for them. May the force be with them. USDC stablecoin, which was once only hosted on Ethereum, but that's no longer the case. USDC is heading to the Stellar blockchain network in early 2021. Stellar Lumens will be the third blockchain to offer USDC support after Ethereum and Algorand. After Tether with $15 billion, USDC is the second biggest stablecoin with the largest market capitalization with $2.8 billion. This represents a 500% growth in the last 6 months. The stablecoin was issued in 2018 by the Central Consortium formed by crypto industry giant Coinbase and Circle. USDC has been audited and created to comply with current regulations and laws. So finally, USDC stablecoin is decoupling itself from Ethereum. Yeah, that is a really good news. Now, let's talk about Cardano, which breaks several interesting news this week. In a recent AMA, IOHK CEO Charles Hoskinson once again provided Cardano's current progress and shared some really interesting information. The biggest of them is that IOHK signed a contract with runtime verification to develop Yella. Whoever doesn't know about Yella, let me explain you that Yella is a virtual machine which gives developer the flexibility to write dApps in the programming language of their choice and then convert them using Yella in order to execute them. Yella is a much more powerful and efficient virtual machine that seems much better than Ethereum virtual machine or Neo virtual machine. Pretty interesting, isn't it? In another interesting disclosure, Charles mentioned that the roadmap of Cardano's Goguen to be released by the end of October 2020. During the month's product update on October the 29th, I'm sure we all are, as part of Cardano community, are equally excited for Halloween now and also for Goguen roadmap updates. In one of his recent YouTube podcasts, Charles shared more details about the Voltaire, the blockchain governance phase, which will eventually turn Cardano into one of the best innovative management platforms available on the market. As most of us already know that the Voltaire era of Cardano will provide the final pieces required for the Cardano network to become a self-sustaining system. With the introduction of a voting and treasury system, network participants will be able to use their stake and voting rights to influence the future development of the network. Voltaire, the upcoming era of Cardano that's set to bring about governance to the blockchain, will introduce some of the most well-planned and complex management processes in the blockchain industry. Charles further explained that at a certain point, the submission and discussion process will evolve into the final step of the ballot, which will introduce voting to the blockchain. And while the introduction of voting is set to be one of the final steps in Cardano's lengthy evolution, it will surely bring about a new set of issues. One of the problems is that currently no entity is in place that will keep track of what funded projects actually do with the money they receive from Cardano's treasury fund by the Cardano community. Charles visualizes a future where a large number of companies pop up offering oversight of the network as a professional service. With every single ADA held in Cardano's treasury belonging to its community, the community will want to know how their millions are spent. IOHK, Cardano's parent company, is serious about the issue and is currently hiring a dedicated product manager that will ensure that all of the business and social structures that need to exist for this to be possible are there. Furthermore, Charles noted that despite the amount of effort and resources spent on accountability structures and auditors, there will be a significant amount of failures and issues Cardano will have to face. And that's why it's of the extreme importance to set up a working feedback loop that will ensure the failure, and no matter how big they might be, get a chance to turn in lessons. Starting with relatively smaller funds like the current 250,000 DC fund will make the process much easier. Working like a reverse funnel, the feedback loop will refine the process before the funds get larger and hold millions of dollars, while the system will take years before it's stable enough to be called done. Charles considered the thing he described as being good enough to get Cardanos to the next stage of its evolution. In his own words, by the time we are done with this, we will have the single best innovation management platform in the world. Very exciting news coming from Cardano and Litecoin partnership, as Litecon is preparing to work with Cardano on a Velvet fork, which will support cross-chain fund settlement, smart contracts, and involved scalability. According to a blog post from David Schwartz, project director at the Litecon Foundation, Litecon is preparing to collaborate with Cardano on cross-chain interoperability. If you all remember that back in July 2020, Charles invited Litecon creator Charlie Lee to collaborate on blockchain interoperability. Since then, Schwartz involved in several conversations with Cardano team on what the collaboration would achieve. He says that the fork would allow cross-chain payment settlements between Cardano and Litecon. It would also improve Litecoin's scalability and introduce support for smart contracts. Now, there is a very valid question. Will Litecon add the feature? Schwartz mentioned that earnest and open discussion on all aspects of such a move for Litecon is needed, as some risks come with the adding feature. He further added that the question is not just for developers and miners, but also for the entire Litecon community. I'm sure most of you folks won't be surprised by the next news. According to the latest data from GitHub, Cardano again released the most updates in a row this month, claimed the first place before Ethereum and Bitcoin. Once again, Cardano came out as undefeated champion if we talk about activity on GitHub. Cardano is currently working hard on the further development of Shelley and has already initiated several developments on Voltaire. In addition, the launch of Goguen, which will be released in a 3-phase release at the end of the year, is still to come. The first feature has already been released from the metadata. The second step of Goguen is the transition from a single asset to a multi-asset system, so that the user will soon be able to create their own tokens. At the same time, Cardano is also developing the ECR20 token converter. Using that feature, companies can easily migrate from Ethereum to Cardano. According to Charles, the multi-asset standard will be far superior to Ethereum's ERC20 standard. The launch of Project Catalyst, the decentralized governance program of Cardano, is also important for development progress. This is intended to generate ideas and suggestions on how companies and developers can be encouraged to build dApps and companies on Cardano ecosystem in the coming future. Now, here is the most interesting news. In a recent tweet, Charles confirmed his interest to come on a podcast at the KiBloc Show. Currently, we are in the process of set up some time for the podcast and will share more information on this soon with the blockchain and Cardano community. I'm so thrilled about this podcast interview with Charles. If you have questions for Charles, please feel free to mention your questions in the comment section below. It can be related to Cardano blockchain, Goguen phase, project timeline, staking rewards, decentralization, or anything worth asking. I love to ask selected questions to Charles on Cardano community's behalf. These are the most interesting news related to blockchain and cryptocurrency projects of the week. I am your host Shweta, signing off now. Thank you so much for watching this episode. I see you next time.